President Kenyatta has been on record saying that climate change needs sufficient resource mobilization from a position of climate mitigation. And the COP27 is going to be coming to Africa for the first time in Egypt. And as a bank, how are you leading the talk, especially when it comes to sharing your personal experiences as an organization with other institutions that we've seen a few companies taking that path, EABL, Safaricom, now we have Standard Chartered. What's your message?
The message is that this is something that we have to do together, partnerships. Whether it's on the public, we need input from the public sector. There's definitely regulations that needs to be changed or new policies that needs to become on board. For instance, how do you make, think about a simple example is solar. How do you make solar affordable to thousands of households? How do you ensure that people can be able to transition? Because businesses, it costs money. So how do you help them transition? So that's in terms of the public space. The private sector as well. What can they contribute in terms of financing? Some of it will be outright donations, but most of it has to be facilities as well, loans that are sustainable. That's important. Then some of it is going to be multilateral, where the large organizations of this world can be able to contribute. So it's bringing all those key players together. So when we see the journey that Kenya has started, and Kenya has made a lot of strides because we are talking about it, there's engagement about it. It's a question of now how do we tie in all this so that everybody, the corporates, the SMEs, the clients, and the individuals are all brought together so that we can make progress. Indeed, a lot of work still cut out for us indeed. Yes. Thank you so much, Mr. Kariuki Ngari. Thank you very much. Well, we've been speaking there to the MD for Standard Chartered Kenya, Kariuki Ngari, giving us his perspectives around climate change and some of the opportunities that exist for businesses here in the country. Well, that brings us to a close on today's edition of The Trading Bell. I now leave you with a quick look at the financial markets.
Hello and welcome to Market Analysis. I'm Noakit Kimbo and today I'm joined by Melody Ndanu Gatuguta from Genghis Capital, and she's an equity analyst. Welcome to the show, Melody.
Thank you for having me.
Wow, so quite an interesting week we've had in regards to some of the movements we're seeing across the counters at the NSC, at the securities. So starting with top gainers, Samir Africa, Flem Tree, Trans-Century, Standard Group, East Africa Portland Cement, and normally these counters that I don't see them at the top gainers most of the times. What's happening?
So I believe because of counters like Safaricom, Equity, KCB, because the foreigners have been selling off, so they've been selling it at a lower price. So that's why you see now these smaller cap counters, the volumes now are becoming more prevalent in the market. So mostly it's the small retail traders who are just taking opportunities, arbitrage opportunities, because you can't really say that there's anything market moving happening in those counters.
And in regards to the issue of foreign players vis-a-vis local investors, is there a leaning towards local investors investing more in small caps compared to foreign investors taking on the big boys?
You'd say that mainly these foreign investors are attracted to the blue chip large counters. That's the KCB, as I said, KCB, Equity, EABL. So it's not necessarily that the retail clients are focused on the small ones. It's just that the foreign participants, they garner a larger percentage of participation in the market. So whenever you see any market activity by these foreigners, it has an effect on the counters as a whole. So now, like the Safaricom, we've seen that it's touched new lows, mainly because of the interest rate hikes we've been seeing in the developed markets. We saw the US It had one of the highest rate hikes in, I think, the past 10 years, mainly because of the inflation that's been going up in the market as well. So even England as well, Switzerland, these developed countries are raising their benchmark rates. So in that regard, they are seen as a more attractive market when you adjust it for the risk return. Markets like Kenya are seen as perceived as more risky. So if you see that rates are going up in these other markets, it's better for you to realign your portfolio and go back to markets such as the US.
So what does that say? And not meaning to be prophetic per se, but in terms of the medium term and long term outlook for markets, if these foreigners are pulling out, what will reverse that trend, because they're the major players in the market?
Well, unfortunately, unless market fundamentals change in our market and also in theirs, unless inflation is brought to a manageable level, unfortunately, we might continue seeing outflows in the market. But local investors can take this as an opportunity to get into these positions at a discounted rate. Let's say counters like Safaricom, it had gone up to highs of 40 plus, and now it's around 24 thereabout. So if an investor wanted to come into this position, they can come in now and they can hopefully get some capital appreciation. Generally, investors should look at companies that are going to be able to ride out this storm. You see, we have elections coming up. We have the Russia-Ukraine war that's been affecting all the markets, the rate hikes. So you look for a product that is going to be used whether or not, I'm sorry to say this, people have money. Like if you have to use your phone, like Safaricom, you're more or less assured that their revenues are going to continue. Offices need their internet, so Safaricom as well, it's a revenue line. So people should just look for these counters that will be able to survive this storm, and hopefully as things get better in time, there's the aspect of capital appreciation.
And I know you've mentioned the issue of blue chip, and looking at our markets, I mean 4 or 5 countries are controlling 70 to 80% of the market.
Yes.
Is that all? Does that also put us at a riskier position as a market overall?
I would say so, yes, because there is that concentration risk. Because now you've seen like these counters like EABL, with the share prices going down, it also brings down the indices. We've seen that the indices have been going down week on week, mainly because of this price depreciation of these counters. So if one or this basket of counters goes down, the whole market is dragged down with it.
Whoa, quite risky. Top losers. Nation Media Group, Express Kenya, logistics people. We have car in general, manufacturing, so cars. Limuri Tea also is there. I love my tea, by the way. So when I see them at top losers, I'm a little bit concerned, starting in Nation Media Group. Why so?
So Nation Media Group, they had their book closure for their dividend last week, so that could be one of the aspects of why the share price has gone down. For Car in general, it's generally had a good year after it announced its results, and it also had a bonus share and a dividend. Recently, it had announced it had launched a new line of motorcycles. That was about 3 weeks ago. So you could say that now investors have already priced in that news in the price. So maybe you could see that's why it's gone down a bit. Right. For Limuru Tea, there was a report that there is a court case that wants to suspend the sale of the 52% stake by Unilever to a private equity fund. So you could say maybe investors are pricing in that news as well. For the other counters, mainly they've been in loss-making territory. So you could say that investors are still not quite moved by them.
All right. And still you only mentioned the indices.
Yes.
All of them tanking on the red.
Yes.
And overall, as you've put it, it's the major players, foreign investors pulling out of the market.
Yes.
Okay. Top movers,
Yes.
I mean, still stands. Safaricom expected to be there, 15.7 million in terms of volumes. KPLC 3.319. You know, people see KPLC there and they're looking at their power interests. Why is KPLC featuring amongst the top movers?
In my opinion, I believe mainly it's because of the free floats. They have a rather large amount of free floats. So investors take advantage of the small price movements that can be envisioned in that stock. So people just take, as I said, arbitrage opportunities. If it moves up and you have like 1 million shares, you can make quite a substantial amount of money. Yeah. So mainly there's nothing per se that's market moving strategy that KPLC has put in place.
All right, definitely. So the rest, equity, ABL, KCB, always expected to be there at the top counters in the in the bourse. But secondary market, you wanted to mention something about the secondary market. What's happening there?
So we had the infrastructure bond auction I think 2 weeks ago, and now the bond was listed. It started trading last week. So we saw quite an amount of activity, and mainly that was because of investors positioning themselves now to get into the paper, those who were rejected, because it had envisaged some very aggressive bidding, and its rate is quite high, I think about 13.7%, which is the highest in the series. So, and that's tax-free. So people are positioning themselves to get into this paper at an attractive rate.
Well, Melody, Danu, Gatuguta. You say your second name is quite difficult, but I've cracked it. Thank you very much.
Thank you.
Melody, who is an equity analyst from Genghis Capital, giving us the latest on matters market analysis. And that's it. I'm Rocky Kimboy. Enjoy your evening.